Welcome back to the States. I'm Greg Bishop. Friday's jobs report is being read as the front edge of a downturn, but that may not be exactly what's happening. With more insight on what's happening with the economy is Everyday Economics hosts, the Center Square publisher Chris Krug and PhD economist Orphée Vungi.
Let's talk about rent inflation. It just hit a 5-year low, and I think what you're trying to say, Dr. O, is nobody's rent really went down.
Exactly.
It sounds like a little bit of a
CPI, right?
Right. It sounds like a little bit of a contradiction, but it's not. It's the difference between how government measures the cost of a roof over your head and what it actually costs you to keep one. It's good to be with you again.
I'm so glad you're back from your vacation, Chris.
You know, I hadn't taken one in quite a while. Greg Bishop, I want to say thanks to him. He is just so unbelievably talented as a journalist and so versatile.
Yes.
So thanks to Greg for holding down Everyday Economics the last couple of weeks. All right, first question. Shelter is the biggest piece of the consumer price index, right? Roughly it's a third of the whole.
45% for inflation.
In June, it rose 0.1%, the smallest increase since January 2021. But when the government measures housing costs, it isn't exactly measuring what a house sells for, right? So what's really inside that number?
Yeah, look, I think the easiest way to put it is it's a combination of, it's really a combination of what people are paying. It's like an average.
Yeah.
What are people paying in rent today, right? But it's based on a survey. And, you know, the way to get to, so it's not bad in terms of reflecting what people are paying in rent, right? The rent to primary residence measure. The owner's equivalent rent measure is basically telling you, you know, is kind of asking you, what would people pay to rent your own home, right?
Yeah.
Again, there's a lot of noise in that number. It's a survey. If you talk to people out there, what are they telling you? They're telling you that the rent is higher than it was before.
Mm-hmm.
Rent growth may have slowed, but rents are increasing still. I think that's the important thing for all listeners. So rents are on the rise. They're just growing at a slower pace.
Yeah.
Right? Now, there had been this kind of slowdown in rent growth going on for a couple of years now.
Mm-hmm.
And the reason for the slowdown in rent growth was a surge of supply in terms of apartment buildings.
Okay.
There's been so many buildings across the country, especially throughout some of the Sun Belt markets, so many apartment buildings being built during the pandemic that actually helped to cool down rent increases.
Okay.
Right? And that was the good news. The bad news is builders stopped building.
Yeah.
They pulled back. And as builders pulled back, the market rebalanced. And today, what we're seeing in the housing market, in rental markets, is that completions, the flow of units coming on the market, is roughly stable, is roughly equal to absorption, right? So supply and demand are roughly in balance now in the rental market.
Yep.
And what that means is that the vacancy rate, right, the share of units that were vacant, that was rising really rapidly to give renters more choice and to slow down rent growth. Well, it's no longer rising. The vacancy rate is somewhat stable. And if you look at Zillow numbers, rent numbers, well, what you learn is that rent growth over the past year has actually started to accelerate.
Interesting.
So remember, it was cooling,
yes,
which was great. It showed up in the CPI rent numbers as, hey, we get some disinflation coming from rents.
Right.
That's no longer the case.
Yeah.
You're starting to see asking rents reaccelerate. And if asking rents start to reaccelerate, well, that means that whatever rent disinflation we were counting on in the government numbers, it's no longer happening.
Yeah. Hey,
and I think that's a big problem for policymakers.
Then we can talk. Well, let's talk about that after we talk about just what's going on the transaction side, right? I mean, it just in the broader in the home market, right? Existing home sales are running nearly 4 million a year and are forecast to slip again. Builder confidence, as you said, is low. It sits at 34 right now, and 50 is the line between builders calling conditions good and calling them poor. So it's leaning toward poor. Housing starts are around 1.43 million, okay? Permits are at 1.37 million, and permits running below starts means that pipeline of new home construction is starting to thin out. So the cost of housing... Right.
That is the main point.
Yeah, so let's talk about this. The cost of housing is cooling at the exact moment almost nobody's buying or building. Right? So what's the market say to you?
I think that is the main point, and that's the point I was making earlier, is that because builders have pulled back, because you're going to have fewer units coming on the market in the near future, you're going to start to see some pressure on the price front.
Okay.
Again. Right? And that pressure is already starting to show up in rents, and it will eventually start to show up in prices, in for sale prices.
Mm-hmm.
Because ultimately, there won't be any homes to buy. Right? For sale inventory is still 20% below where it was before the pandemic on the for sale side. Right? So, you got people moving about their lives. They want to get a unit. Maybe they're moving out of their parents' house and trying to rent a small apartment.
Yeah.
Well, there are no more apartments, no fresh new apartments coming on the market. The vacancy rate's no longer rising. People trying to get in the for sale market and buy their first home. Well, there aren't that many homes to choose from.
That's right.
Right? And so, and I talk about this all the time. If you look at across the country, the gap between the number of families that are in need of a house or an apartment and the number of units we have available for rental for sale each year is about 4.3 million units. That's a big gap, right? And that gap isn't going away if builders start to pull back, which is exactly what they've done in the past couple of years, right? They're slowing down the pace of new construction. It means inventory is no longer rising, is not expected to increase very much.
Yeah.
And both on the for sale side and the for rent side, which means that prices aren't coming down. And in fact, price growth could start to accelerate again.
Well, we're going to keep an eye on this. There's lots to monitor here. I mean, that gap is, I think, of concern to a lot of Americans, especially the Americans that are trying to become first-time home buyers, right? I mean, that the barrier to entry to buy that first home is pretty high right now for a lot of
people. And a lot of people say, well, it's the mortgage rates. No, I mean, mortgage rates are at kind of the average. Yes, they're higher, but they're roughly at a normal place.
Right, that's the issue. First time we bought a house, I think our mortgage rate was 7 5/8, and we were doing cartwheels because that was just a great number.
They're roughly at a normal place. The problem is the price level is much higher. It's much higher.
That is the problem. Well, hey, thanks again for everything that you do for Everyday Economics and the Center Square. Make sure that you read Orphée's Everyday Economics column each week, Mondays at the Center Square. Everyday Economics, just so you know, is part of the States. That's the Center Square's daily news magazine. You can see that on YouTube and across streaming platforms.